We're going up to 160?
Yeah, it seems that maybe this is the new path of least resistance for sterling to go to 1.6. And it's not only because of the job numbers, but even the PMIs surveys for the construction or for the services and for the manufacturing for the UK have gone above those levels in the US, in the Eurozone as a region, in Germany, and even in China. The recovery is broad-based for the last few months, and this is one of the reasons why sterling is the biggest or the strongest performing. This does not mean that the BOE is going to raise rates anytime soon, but it may, one of the reasons that may prop the sterling higher might be that over the next few months we will see more dissent, hawkish dissent in the Bank of England within the MPC. Maybe we may see some next week. So that could be one of the reasons that would push sterling higher.
Okay, but we have come a long way in a short space of time. Do you think we've come too far too soon? I mean, isn't it time for some sort of correction?
Probably towards 1.55, 1.54. But again, you know, the current, you know, the pound right now is the last currency probably to sell, maybe next to the Aussie. The MPC factor is very important. Mr. Carney has been hailed in his control of the MPC and so on and so forth. But there's going to be some hawkish dissent, and that's one of the reasons. Look, one of the factors that may lead to some movements down towards 1.5, 1.55, 1.56 would be probably the FOMC decision next week, will be the minutes of the MPC next week. But the fact that the UK is isolated from this Syria story, thanks to the Parliament, is actually a positive thing for the British pound.
Mark Carney, you mentioned there, is his star fading?
Is his star fading? No, probably not. Listen, after all, this is a good thing. He is here to make sure that the economy improves, and it might and it will help that. You know, tomorrow he's expected to be speaking, and but again, you know, he may say, well, look, you know, inflation, you know, unemployment is improving, but we still want it to go all the way down 7% or 6.5. But you know, I control the base rate, and base rate is still going to remain at 0.5%.